Morning, welcome everyone. We'll be starting very shortly.
Have a seat. Mel, come a little bit. Oh, that's it. That's good. Yeah, that looks all there.
So let's get started. Well, thank you everyone for joining us this morning for the Caribbean Economic Outlook 2017. It's our pleasure to have you here with us today. I'm Melissa Marchand with Global News Matters, and I'd like to start off just by letting everyone know that we do have a presentation that will be guiding today's discussions, and you can go ahead and download that presentation at bit.ly, that's bit.ly/2017 CEOX. So if you follow that link, you can go ahead and download that presentation, which will help you follow today's discussions. We also, I'd just like to welcome our two guests today. We have with us leading Caribbean economist Marla Dugren, who is also the group economist for RBC Caribbean Banking. And we have energy correspondent Roger Dwarker here with us as well today to talk about what we're seeing for 2017. So I'm going to go ahead and just get started. I also want to mention that we do have a live Q&A at the end of today's discussion, and Roger will be moderating that for us today. You can go ahead and submit your questions. We're broadcasting simultaneously on Periscope as well as through the webinar platform. So you're welcome to submit those questions throughout today's discussions, and we'll get to those at the very end. To get started, Marla, 2016 has been a year of unexpected outcomes. We've seen a lot of political upsets. So I'd like to start off by just having you tell us a little bit about what are some of the implications on the global scale. What are you seeing? And if you could just start off by commenting on some of these things. We've seen Brexit, Trump, some of these political upsets that we've been seeing.
Yeah, thanks, Melissa. Yeah, 2016 has really been a tumultuous year. And, in my view, actually, it has been a year that I think we've seen democracy suffer. Democracy in the US, for example, if you look at the fact that the US election has seen its lowest turnout in about 20 years. We had turnout of about 55%. Hillary Clinton won the popular vote by over 2% of the voter turnout, and yet still she's not going to be president. So to me, that's not truly what you would think of as a truly democratic outcome in my view. We've seen, for example, in the Eurozone, my sense is that there's been, and the vote in Italy is a reflection of that. There's been quite a bit of the need for change, or the vote for change, and the desire for change, and I think that stems from the fact that in the EU you have a situation where I believe this experiment, I think, has run its course, and you have the peripheral countries that, they don't seem to have as much equality in terms of their influence in the overall EU structure as do the big countries. So I have a chart in the slide number 3 that, for example, show the Global Freedom Report that shows actually that in 1985, 34% of the world's population lived in free countries. 33% of the world's population was not free. In 2016, 36% of the world's population is not free. So that gives you a reflection of what I'm saying, that I think democracy seems to have been affected. Also, Kofi Annan wrote an article, I think it was yesterday or the day before, where he was saying the same thing, that democracy seems to have been challenged recently. And so that's one of the things that I am seeing playing out, that the democracy and what we think of democracy seems to be under a bit of threat. And all of these outcomes, so you mentioned Brexit, you mentioned Trump, and a lot of people ascribe the outcomes to things like xenophobia, the middle class being left behind, automation, job losses, and so on. But I think underlying all of those things is inequality. So if you look at the way that inequality has been trending over the last few years since the global financial crisis, this year, Oxfam released a report that basically said the richest 1% in the world now have more wealth than the rest of the world combined. The richest 1% has more wealth than the rest of the world combined. And 62 individuals on the planet, 53 men and 9 women, have the same wealth as the bottom half of the global population. And so that extent of inequality is actually unprecedented. This is the highest it's been. And my sense is that this rise in inequality has been largely exacerbated by the policy response to the last global financial crisis. So if you think back to 2009 and what the G20 policy response was, it was basically monetary and fiscal stimulus. And that monetary and fiscal stimulus and unconventional monetary policy, for example, was aimed at making sure that the real economy gets the money it needs in terms of credit from banks, that it will basically generate activity, economic activity, generate jobs, and generate growth again. And that might have happened to a certain extent, but I think what has really happened to a more significant extent is the fact that you've seen asset prices go up. And who are the holders of asset prices? Largely the 1% and the rich. And so you've seen their wealth increase really significantly as a direct policy response to the, as a direct result of the policy response to the global financial crisis. And I mean, if I might add, I think the real tragedy behind all of this is that nobody seems to have their eyes on this problem as one that needs a coordinated policy response from, let's just say, a G20 type level, the way that we had a policy response to the global financial crisis. Right now, the global economy is growing at 3.1%, according to the IMF. Growth at 3% or less, global growth is considered to be a recession. This is the third consecutive year of progressively slower growth in the global economy. Okay, why is it that we're not having a meaningful and coordinated discussion and a policy response on this? I am not sure why. And I think that inequality is actually, if you look at there was an IMF report that spoke to this, that inequality actually drives lower growth. If you have incomes increasing at the top 20% in terms of incomes, the richest 20%, if you have incomes increasing in that bracket, in the medium term, it causes growth to decline. If you have incomes increasing in the bottom 20%, in the medium term, you have GDP increasing. So this is why I think, this is one of the reasons I think that you have global growth slowing down. Inequality is really driving the political outcomes, but it's also driving growth much lower.
Okay, Marla, and how do you see inequality impacting specifically in the Caribbean?
Well, in the Caribbean, we have, first of all, we have a relatively high level of poverty in many countries in the Caribbean. We have most countries having more than 20% of their population living below the poverty line. And that's, first of all, a challenge. And then beyond poverty, if you think of inequality, the Gini coefficient that reflects the extent of your inequality in the US, their Gini coefficient is 0.4. In the Caribbean, most countries are above 0.4, meaning more unequal than the US. And going back to what I said earlier, if we agree, as empirical research has shown, that high levels of inequality causes growth to decline in the medium term, this is one of the implications we're seeing in the Caribbean. that income that accrues to the top 20% does not translate into growth in the economy. So we need to fix that inequality problem in the Caribbean and I think on a global scale.
And outside of inequality, what do you see that's impacting global growth?
So a couple of things that I think are impacting global growth and growth in the region as well. If you look at cross-border capital flows, for example, in the chart on page 8, you will see that as a percentage of global GDP, cross-border capital flows now accounts for 2.6% of global GDP. This chart goes back to 1989. It is the lowest since the beginning of this chart.
Let me interrupt for just a second because I know we have people on Periscope that may not be seeing the notes that we have on the webinar. You can download a copy of the presentation that's guiding today's discussion, and Marla's referred to a few slides. That's at bit.ly/2017 CEOX. So I'm sorry to interrupt. Go ahead with.
No, of course. Yeah, so, if you have cross-border capital flows declining so significantly as a percentage of GDP, that to me suggests that even in the region, we will be seeing similar patterns. And if you look at our net FDI inflows in the region, we actually are seeing a similar pattern. And I think that that's going to be a challenge for this region because, well, on two levels. One is that we need capital flows in this region to help us with infrastructure and to help invest in our productive capacity, right? We need capital FDI and capital inflows. But the other thing is that in the Caribbean, most of us run current account deficits, which means we import more than we export. And we finance the deficit on the current account via inflows on the capital account. And that means we borrow US dollars or we get FDI, foreign direct investment inflows. And so if we're seeing that foreign direct investment inflows and capital inflows are declining, it means that for us, we're going to be challenged to have to balance our balance of payments accounts. We will see weakening reserves, which we have been seeing in many countries. And specifically, I want to talk about China. There was recently some news reports saying that China is looking to reduce its outflow of US dollars because they're trying to hold on to reserves. The Chinese government said specifically that state-owned enterprises will not be allowed to invest more than $1 billion on any single overseas real estate transaction. That to me is going to have implications for the Caribbean. We have relied very heavily in the past few years on Chinese capital inflows and Chinese foreign direct investment. It has implications for Curacao, for the refinery. It has implications probably for Bahamar in Bahamas, insofar as they need more capital to finish that project. And it has implications for all of us who've been benefiting from inflows of Chinese capital. That's something we have to be aware of, and I think it's going to be a challenge for us in the Caribbean.
I'd like to switch gears a little bit and talk about commodity prices. And if you could just talk to us a little bit about what's the outlook for oil, gas, for gold, and what does this mean for the region?
Okay, so RBC Capital Markets is expecting WTI to average about $56.40 next year, and getting up to the low $60 barrel range by late 2017. So a year from now, we're looking at maybe $60, $61 a barrel. For Trinidad, normally we think of this as a good thing. However, right now, Trinidad, we're producing about 75,000 barrels a day. We're importing about 100,000 barrels a day to run the refinery. So higher oil prices can probably put a strain on our cost of raw materials for running the refinery. With respect to the rest of the Caribbean, however, it's going to be largely a challenge when you see oil prices creeping up. It means that they have to spend more to import their fuel. For Suriname, it's also likely to be a benefit based on the fact that they produce. And well, for Guyana and the oil exploration that they have taking place there. With respect to gold prices, RBC Capital Markets again is expecting gold to average $1,264 this year, and $1,241 next year. So we're expecting to see a bit of a decline in gold prices next year. This is going to have implications for Suriname, Guyana, and the Dominican Republic. And we see that there is a 95% correlation between 1 month gold and 3 month prices. And so if we're projecting that gold is going to soften, then it means that we're also projecting that natural gas is going to soften as well, which of course has negative implications for Trinidad.
Okay. And what about the outlook for currencies?
Well, with respect to the US dollar specifically, we've seen for the past year so far, the US dollar has been strengthening. What that means is that all of the currencies that are pegged to the US dollar in this region, their currencies have also been appreciating against the other major currencies like the Canadian dollar, the euro, the pound sterling, and so on. So it means that export and export price competitiveness, tourism price competitiveness can be affected for those who are holders of those currencies. If you look at, for example, the floating currencies in the region, we've seen the Jamaican dollar depreciate at a pace of about 8% year on year. This year, Trinidad and Tobago's dollar depreciated by about 6% year over year. Dominican peso by about 2.5% this year. The Suriname dollar, of course, they devalued last year in November. We've seen their currency decline by about 120% since that depreciation. My expectation is that we will continue to see the Jamaican dollar, Trinidad and Tobago dollar, the peso, and the Suriname dollar depreciate next year. Depreciation, I think, might lessen for Jamaica and for Suriname. For us in Trinidad, I think the government has indicated that probably they're comfortable with this pace of depreciation, which of course will take us well over $7 next year. And that's basically my sense for the currencies that are
Which are the currencies that concern you the most?
Well, the currencies that concern me the most are the ones that are fixed, that have low reserves. Suriname is a concern to me, but Suriname has an IMF program now, and they've changed their regime from a fixed peg to a floating currency now. But the currencies that have the least reserves, so Bahamas has less than 3 months of import cover. Barbados has 2.6 months of import cover, and Barbados is actually one that I'm most concerned about. And it's not just because of the fact that they have less than 3 months of import cover, according to my calculation, but also because of the extent to which Barbados central bank has been printing Barbados currency, local currency, and expanding the money supply. So basically, the money supply has expanded by 28% to 2.34 billion in October, 28% year over year. And this is being driven by fiscal deterioration, of course. But this pace of expansion of the local money supply is putting pressure on foreign reserves in Barbados. And I think that because of that, that pressure at some point, if it continues at this pace, something's got to give, in my view.
So let's switch gears again, and I'd like to ask you a few questions on Cuba. I'd like to turn our attention there for a few minutes. I think that there's a lot of people that have basically two questions on their mind. The death of Fidel Castro and the election of Donald Trump. What does this mean for Cuba?
Well, in my sense, I think Fidel's death, however tragic it is, I don't feel that that's going to have significant detrimental impacts on the economy. Of course, on people's emotionally and psychologically, you can have some implications there, but economically, I'm not so sure that the implications would be negative. However, on the flip side, you might recall 2 years ago when President Obama announced that the US will be entering this rapprochement with Cuba and trying to normalize relations. And that led to a flurry of interest and investment from not just the US, from the rest of the world. Even though legally nothing had changed at that point in time, diplomatically nothing had changed at that point in time. But because of his message and because of what it meant, you saw lots of interest heightening in Cuba. Now we're seeing President-elect Donald Trump making some statements that suggest that his stance would probably not be the same as President Obama has been. He would probably not be as keen to normalize relations with Cuba. And I suspect that that might have some implications, again, from a pure confidence perspective. Forget the legality, forget the diplomatic, the diplomatic relationship. Just from a confidence perspective to Americans and to the rest of the world, I think it sends a message, and people, investors and prospective investors, might want to take a pause. I suspect that's what might happen. They might want to pause and wait and see what will happen and what Trump's stance really will be, given what he's been saying recently.
So where do you see growth for Cuba?
Well, we were looking at probably 2% growth. The official projection was this year. Given what we are seeing happening in Venezuela and the implications that that's having on Cuba, given what I just discussed about President-elect Trump's stance on Cuba, I suspect we're going to see softer growth in Cuba this year. Maybe not 2% growth next year. Sorry, I think the challenges will ramp up. I'm not so sure that I'm seeing where positive impetus will come. I mean, we know that tourism is growing significantly. We know that the US just added commercial flights for the first time, was it last week? And cruise ship industry, for example, has commenced. So,
does tourism really move the needle on Cuba's economy? It seems that it doesn't. So where does it impact?
Right. So from a GDP perspective, maybe it's not that significant, not yet, but it does have implications for the inflow of US dollars. So you've seen a lot of demand for jobs in the tourism industry in Cuba, even from people who are not traditionally trained to work in the tourism industry. And that's because of the possibility and the attractiveness of earning US dollars in tips and so on, for example. So my sense is that the implications of the tourism sector growing can be positive, but maybe it will not be the one to carry the whole country. My sense also, though, is that growth in the tourism sector and the possibility of earning US dollars is actually, it seems to me to be causing a bit of inequality. And I mean, going back to what I spoke about earlier, and the increase in inequality in Cuba, which of course is counter to the foundations of the revolution in Cuba.
Exactly.
This is something they need to think about.
What are your general growth expectations for the region?
Well, for next year, I think even though the authorities are saying that in Trinidad, for example, the economy will turn around next year, we'll have positive growth. I believe we will have negative growth next year. I believe Trinidad and possibly Suriname might have negative growth this year. Everybody else I'm expecting to have positive growth. The reason why I'm expecting negative growth next year in Trinidad is because if you think about what happened in 2015 and 2016 with respect to elections, with respect to the level of government spending, that's not going to happen in 2017. That level of spending is not going to persist. The contraction that we're seeing right now, the 6.7% for the first half of this year, for example, that we saw happen, is really an energy sector contraction. I believe the ramifications are not fully being felt in the non-energy onshore sector just yet, and I think next year is when that's going to hit. I think next year when the fiscal spending actually really declines, as we've gotten all these elections out of the way, and with oil prices not moving too meaningfully. I mean, we have oil prices inching up, of course, based on what's happened with OPEC and their agreement to cut output, but that's really, as I mentioned earlier, why it's not going to have significant implications, positive implications, but because we're importing so much oil right now. So I believe that we will see a contraction next year based on what's going to happen in the non-energy sector and the slowdown in the non-energy sector. to talk about the other countries in the region, what I expect to see next year. For Guyana, they are projecting 3.7% growth. I'm quite positive on what growth will look like in Guyana based on oil and gas exploration, despite the fact that they expect gold prices to soften. Dominican Republic, 4.5% growth is what's expected, softer than what we're seeing right now, but then again, with gold prices softening, that would be expected as well, but still that's the very strong growth. For the OECS, I'm expecting to see, largely 1 to 2, to even in the case of St. Kitts and Nevis, over 3% growth I'm seeing projected by the IMF and so on. And that's largely driven by citizenship by investment, by the level of construction that goes with citizenship by investment. I think if you think about tourism, tourism from the US, I think, can continue to grow. Canada, we're seeing tourism arrivals from throughout the region soften, coming from Canada. And from the from the UK and the Eurozone, I think we might see some softening from tourism flows from those source markets next year, especially if we continue to see things in the Eurozone develop in a way that affects confidence and increases uncertainty. Citizenship by investment, the loss of correspondent banking relationships, I think can also be a constraint to growth in the OECS and throughout the Caribbean next year. In the Dutch islands, around 1% growth is what I'm expecting. Barbados is thinking, it's for the IMF looking at 1.7% growth. I am a bit, I think that projection is a bit at risk, especially with if you see Canadian arrivals softening, UK arrivals softening, and then of course, as I mentioned, the challenges that they have with the currency. But overall, I think many countries next year are going to see improved growth in the Caribbean. But the factors that might drive that improved growth would be continued strengthening of the US economy, stability in the Eurozone, which we're not so sure we're going to have, so that's at risk, and oil prices increasing only moderately, like into the 50s, not really beyond 60. If we have those things happening, and we don't have any major climate change related disasters, whether it's disasters like the hurricane we saw this year, I think we can see growth looking up in many countries next year.
Okay. I just want to again say that the presentation that's been guiding today's discussion is available, and you can download it if you go to bit.ly/2017 CEOX. That's all in lowercase. You can see the figures that Marla's just reviewed as well there. So I want to make sure and just say that again. We also return
to the questions.
I'd like to hear from Roger for just a moment. We've invited Roger Guarca to be here with us today.
Yeah.
And energy correspondent, and I'll let you go ahead and.
Yeah, I wanted to, the reason, of course, we wanted to have Roger here today is because we have this very exciting development here in Trinidad and Tobago, where we have our government signing some agreements, and Shell, of course, as well, signing some agreements with Venezuela with respect to gas. And I know you've been covering this development very intensely, and we're excited to hear what you have to tell us about what's going on in that sphere.
Well, the agreement was signed on Monday between the government of Trinidad and Tobago and the government of Venezuela. What it essentially is about gas supply from the Dragon field, which is located about 22 kilometers off the coast of Trinidad, so northwest coast, into the Dragon field. For those of you who don't know, the Dragon field has approximately 12 to 13 trillion cubic feet of gas. It is currently being commercially plowed, if you like, by Venezuela in its initial stages. So Trinidad and Tobago has a deficit right now of natural gas, as you know, 17% down this year, which is major for this country because it has a huge problem with the downstream sector, and also supplying Atlantic LNG, which is the 6th largest LNG supplier in the world. So this deal was signed on Monday to supply 1 trillion cubic feet of gas within 2 to 3 years, essentially, for it to come on stream. Now, there are some proclivities to this whole idea, which is it's between government, but Shell on Trinidad's side and PDVSA in Venezuela, the two main brokers involved in this now, because we're in the second stage of the agreement. So they're working out the intricate details involving things like how do you get from the stage where we are right now, i.e. the signing of an agreement, to actually laying down a pipeline, because that's essentially the next stage. And also it's hoped that it will help to implement and put more gas into Trinidad and Tobago over the next at least 5 to 10 years. However, in addition to which, you also have to bring in the fact that Trinidad's own BP Juniper project is due to come through next year with 17 trillion cubic feet of gas, something like that. And that is designed to prop the economy for the next 15 to 20 years. Essentially, that's a projection to build that gas. But also, if you want to bring in the economist's point of view on this as well, how do you put that against where US shale is right now and where prices will be? Because we know that I think according to a presentation, it's $3 per MMBTU as a projection for LNG. So if you look at that for next year and where we are currently in a deficit, the deficit's going to take 2 to 3 years to essentially fill, right? Presumably.
Yes.
So you look at that, but also let's work in OPEC as well. Gas price, oil prices at 52, 53, projection about 60, you said about next year, about that roughly for oil, but obviously the two are interrelated to each other.
Yes.
So if we work on Trinidad, it's not an oil-based economy, it is an LNG-based economy. Of course, 75,000 barrels a day is a minor drop in the ocean, but let's work the shale in. The US riggers are saying, I think it was on Bloomberg the other day, they were talking about, well, since it's a good price at 60, let's restart the rigs. Fine, you restart the rigs, but then you start to flood the market with shale.
Yeah.
So therefore, let's put the whole thing in context, and again, I'll ask your expert opinion on this. So we're here, right? Shale's at this price, and we're supplying this thing. You go forward 5 years, but where will the price be once shale comes in?
Yeah.
And can you actively compete in a market where if we're selling at 3 and shale is selling at 2 and going into other markets, according to the contracts, where would you buy at the cheaper price, right?
Yeah,
so it's a long-term projection, if you like.
Yeah.
But anyhow, you take it, most energy economists in this country and abroad as well saying, very good thing for Trinidad and Tobago, because a trillion cubic feet of gas also bring in the fact that it's about international relations as well.
Yes.
Our neighbor next door,
Yeah.
Venezuela needs the money,
Yes.
essentially.
Well, we need the money too.
We need the gas.
We need the gas.
Yes.
We need the gas. I mean, for me, it represents hope because the alternative is to do nothing.
Mhm.
And I think that's an unacceptable alternative. And we know where that will get us. So I'm comforted to see that at least something's happening and at least we have a reason to hope. And that's what I will take away from this, you know.
Indeed. Now, I know Mel,
we have
a load of questions.
Yeah.
Lots of people
We've
getting
seen them.
involved there.
Yeah, we've seen
I don't know, where should we start?
You have some
Let's start on the
questions?
Periscope question. We have one from Samurai. Hello to you. Where do you see Caribbean FDI model in 2017 against the Trump effect?
Yeah, I actually think that I'm worried that we're going to continue to see net foreign direct investment inflows in the Caribbean decline. Not just because of where the global trend is going, and we've seen that in one of the charts that I have on these slides, you will see that. But I think not just Trump, but the whole climate and general sense of uncertainty, I think is pervasive and is going to affect foreign direct investment flows in this region next year and maybe even beyond, unless we find a way to stabilize and to reduce the level of uncertainty. That's my sense.
Okay, so we have another question here from Romy, who's watching us here. Hi there.
From
Romy,
Curacao.
I believe.
Hello.
Hello, Romy. What are the main drivers of FDI in the Caribbean and in what sectors?
Well, it depends on the country. I mean, right now in Trinidad and in Guyana, we're seeing lots of FDI inflows on the energy sector. We saw Bahamas, for example, have the largest project in the English-speaking Caribbean ever in Baha Mar, which was just below $4 billion US. That was a massive project. So it depends. I mean, you do have different sectors in different countries that attract FDI. I believe that that's going to continue. You're going to continue to see, especially with Guyana and their find, a lot of FDI flowing in there, Trinidad as well. We have seen gold mines, again in
And you talked about gold earlier, didn't you?
Right. But in terms of tourism, FDI, apart from Cuba, which is where we're seeing most of the tourism FDI going in this region, I don't know that I expect to see massive tourism projects, especially in the English-speaking Caribbean in the next year. And my sense is that we might be seeing a softening there.
Okay, let's go to Anthony Weeks. He is watching us right now. He says, if President Trump follows through with his immigration reform policy, how will that policy impact the Caribbean and the remittances in the sector, and ultimately GDP?
Yeah, remittances. Well, that's a
very clever question.
That's a good question, and it's a troubling question because you have some countries like Jamaica, Guyana, and in the OECS as well, very heavily dependent on remittances, not just from the US, but from the UK, from Canada, and so on. So yes, there can be implications for that, but I think that whole immigration issue has broader implications than just remittances. It has implications for the relationship between countries, because we saw even between Trinidad and Jamaica that causing lots of problems. And I think when you have deterioration in the relationship between countries, then it can affect trade, it can affect investment, cross-border investment. So it can have so many implications well beyond the remittance field. So I'm hoping that a lot of what the president-elect had said might not really materialize, because some of these were very, very, I would say, troubling statements. So let's see how it goes. I wouldn't get too worried just yet that he's going to go ahead and implement on a very broad scale what he said. Let's see.
Okay, so we have one from John here, and John is asking about Barbados. This is actually quite an interesting question. He said, given Barbados' current economic issues and the problems and challenges they're facing, how do you see the Barbadian currency performing over the next year? And where do you see the Barbados economy going? And also, in addition to that question, I'll add something as well. How do you see them looking forward for their economic picture?
Well, Barbados, like we spoke just now, Melissa, that I am quite concerned about Barbados. They just celebrated 50 years of independence, and I'm, very happy and congratulate them. But the fact that we have reserves at below 3 months of imports, the fact that we've seen the central bank printing at the pace that they have been, recently the central bank also announced that they're tightening foreign exchange controls again. They want to make sure that they have approvals and they see sight of all transactions that foreign transactions that are going out via remittances and capital outflows for investment and so on. So tightening foreign exchange control suggests to me that there is a challenge, and it's a bit of a worrying situation. My outlook is that there is an election that's due by early 2018. So my sense is that because there is an election due in about a year to 15 months, you're not going to see major shifts in policy right now that will threaten an election outcome. So I suspect that the problem is, what I'm trying to say is that I suspect the problem, which in essence, the genesis of it is fiscal slippage. I suspect that problem will not be addressed in a meaningful way in the next year. And so you're going to continue to see fiscal deterioration. You're going to continue to see central bank printing and expanding the money supply. You're going to continue to see reserves come under pressure and continue to fall. We have about 440 million US dollars right now in reserves, according to the central bank statistics. And I suspect that that's going to continue to weaken. I don't know what it will take to make it better, except for a very, very big shift in terms of policy, and I don't see that happening before the election, unfortunately.
Well, we're going to pause and we'll let Mel tell everyone where you can access your presentation while I get some more questions.
Absolutely. The presentation that has guided today's discussion is available. You can go to bit.ly, that's bit.ly/2017 CEOX. That's all in lowercase.
Okay, we have another question here from Nicholas, which is interesting. What are your expectations for the electricity sector reform in the Dominican Republic? Would you like to have a squiz at that, perhaps?
No.
No? Okay, we'll have to research that one.
I don't know much about the electric. I know that they have a challenge and they have a deficit and they need to fix that. I know that they've been looking more towards renewables, and actually They import natural gas and they generate some electricity via natural gas. But I don't know much about what the plans are for electricity reform. Unfortunately, my apologies.
Right. How about this one? What effect do you expect the rise in the use of renewable energy as its cost decreases to become competitive but fossil fuel power generation in the Caribbean? And then, and middle term, what are the Caribbean governments doing to promote renewable energy? That's from Roll.
Yeah, I think.
Good question.
Yeah, good question. I think that more and more you're seeing governments giving incentives to switch to cleaner energy, so natural gas, and then also giving incentives for renewables, which I think is a very, very good and promising development. The one country that I stand out in my mind is Barbados with respect to their renewables sector and how well they've been pushing that and incentivizing that. And you can feed electricity generated privately via renewables or otherwise back into the grid. But we know that Jamaica, for example, has been heading in that direction. And many of the countries in the OECS, especially since you have some challenges under Petrocaribe with Venezuela's crisis, I think it's a positive development. I think the point at which renewables will challenge fossil fuel consumption is not near. I think it will take some time before we get to that point, but I do think that it's a development that's here to stay. I think renewables and the thrust for renewables in this region is going to continue, and it's one of those industries I think is a growth industry in this region actually.
Mel has a question for you. Will these slides be available after the webinar?
These slides will be available. You can download them at bit.ly/2017 CEOX, that's in lowercase letters. We will also be sending out a replay link to everyone that signed up. Those that are on Periscope, Marla will tweet it out, so they'll get that as well.
Got some really good comments. One from Barry here. Great comment, Marla, on the fact that Trinidad via Petrotrin is a net oil importer and high oil price is not automatically a good thing for us. Exactly. Want to expand a bit?
Well, yeah, insofar as Petrotrin needs, I think, 160-something thousand barrels a day, and we're producing 75,000 barrels a day. It means we have to import the difference. Now, we do export. I think local consumption is about a quarter of what Petrotrin produces, and so they export 3/4. So it means that hopefully higher input costs, higher oil prices, crude oil prices, will translate into higher higher prices for the output, and therefore offset. But remember, we do have Petrotrin is already loss-making. There was I think it was about 1.8 billion in losses before tax announced recently. But yeah, I think it's the fact that we are a net oil importer suggests to me that it's not an automatic thing that we necessarily do better when oil prices are higher from a refinery standpoint. But I remember there was this paper that the IDB had done some years ago that showed that there is an 80% correlation between the oil price and growth in Trinidad. So there is an implication for fiscal spending with respect to the tax take from the oil producers. Now, remember we have this problem, well, not problem, we have this situation with accelerated depreciation of the energy and producers here in Trinidad. So that question of how much tax they're paying right now it means that with respect to oil prices going up, still the tax take is not going to be that significant. And so I believe the impact will not be a massive positive impact. It will probably be a positive psychological impact, certainly when people see oil prices go up in Trinidad, we tend to get happy and we have a great carnival. But in terms of the fiscal implications and in terms of the implications for the profitability of the refinery, I'm not so sure that's going to be automatically that positive.
Indeed. Okay, Marla, we're going to broaden the spectrum a little bit. Yeah. Jeffrey Marshall here is asking a question. The euro weakened quite significantly recently. What is your outlook for the next 12 to 18 months?
Well, I think that depends very heavily on the political outcomes in the Eurozone. Right now, currency movements are largely being driven not so much by interest rates, but by sentiment, and sentiment driven by when you have an outcome like what we had in Italy earlier this week, what we had with respect to Brexit earlier this year. So my sense is that if we continue to see, there's been talk of the Netherlands and France heading in the same direction of questioning their own participation in the EU, then we can see some significant weakness in my view. If, however, on the political side things stabilize and we don't have any more of these unexpected political outcomes, then my sense is we can see more of a stable euro currency.
Okay, Bruce is asking a question here. I don't know where he's calling in from, but it says, is there tightening US dollar liquidity in TNT? Are companies finding it harder to get US currency to fund imported goods?
Oh, definitely. I mean, that's been a problem for several years. We saw the Prime Minister made
watching in Miami, actually. He's just tweeted back.
Hi, Bruce. We saw the Prime Minister made a very interesting announcement. Was that yesterday, Roger, where he said that the shift in the allocation system at the central bank, the US dollar allocation system, a couple of years ago, created and exacerbated the tightness in the US dollar availability in Trinidad. And my sense is that problem has actually risen, not just because of the fact that we're earning less foreign exchange, which we are, based on where oil prices are, where production is, gas prices, but also the fact that the central bank has injected 47% less year-on-year US dollars into the financial system in Trinidad. It means that the commercial banks have that much less to sell to our clients. And so, of course, there's massive tightening. And we even heard our Prime Minister talk about the fact that we do have a black market for foreign currency in Trinidad and Tobago. To me, it was a welcome admission and a welcome acknowledgement of the facts of what's really happening. And hopefully, I hope that the policymakers, as led by the Prime Minister, take this piece of information and decide that they're going to do something about it and amend the policy stance, not just in terms of injections, but in terms of the price of the US dollar in Trinidad and Tobago. Right now, Trinidad and Tobago has valued currency in the whole of the Caribbean and Latin America, according to UN ECLA, and according to the last IMF Article 4 report, the Trinidad and Tobago dollar is about 21 to 50% overvalued, which means if it was not overvalued, it would be trading anywhere between $8 and $10 for one US dollar. If you continue to run an overvalued currency, it means that you are subsidizing imports, you're penalizing exports, and you're incentivizing people to buy US dollar and US dollar denominated securities and goods. And so let's hope that the Prime Minister's announcement, his acknowledgement that there is a black market, prompts the policymakers to amend their policy stance with respect to foreign currency management in Trinidad and Tobago.
Absolutely brilliant answer there, Marla. Just going to say hello to our 48 viewers who are looking on at you around the world on this, and also on Periscope. We have 10 viewers as well, so say hi. In the meantime, let's see. We've got a question from M. Can diversification ever work in the Caribbean, or are we destined for Dutch disease? Whether from LNG or tourism, the clusters never seem to get enough traction. Presuming M is somewhere in Trinidad.
I'm not sure. I think Dutch disease is alive and well in Trinidad and Tobago already. My sense about diversification, we've been talking about diversification since I know myself. I think things really will not get moving in that direction until we have a massive problem. And I don't know that we have an acknowledgement that we have a massive problem yet in Trinidad or otherwise. There are some countries that are very well diversified in the Caribbean. You have the Dominican Republic, you have Cuba, for example. And I remember Gervais Warner made this point recently, which is quite valid. The Caribbean on a whole is a very diversified economy, but individually we are not, all right? Most of us are not. But if you take us as a collective, we are quite diversified. And so, do we really need to, then it leads to the question, do we really need to be individually diversified? that's a big whole debate that we can get into some other time.
Indeed. Okay, so Sean Mason here saying, has Trinidad signed FATCA any implications for the economy going forward? Parliament tomorrow again.
Yes, and then I think we have a February deadline. I think that issue is such an embarrassment, first of all, to me. I think that our country could have demonstrated a lot better management by having passed that legislation and done what we needed to do a long time ago within the deadline. But of course, it hadn't happened. We have a new deadline in February. I think if we don't pass the legislation, we don't put everything in place that needs to be put in place, it can have all kinds of implications, not just from a financial sector standpoint and in terms of the movement of money and so on, but our relationship with the US and with US banks and how we transact with US banks, but even our sovereign credit rating, I think it can have implications for. So we need to have this done quickly and expeditiously. I hope that the government and the opposition can cooperate to do what's best for the country.
Okay, Winston is asking the question, can you talk about the outlook of the tourism sector for the Caribbean, taking into consideration the opening up of Cuba and the Trump effect? What needs to be done by governments to improve the tourism product and hence income?
So as I mentioned earlier, I think there is a bit of a loss of market share going to Cuba already. If you look at how Cuba's stopover arrivals have been growing more so than the rest of the region, faster, it suggests to me that Cuba is already pulling. If you look at how stopover arrivals, for example, have softened in Bahamas and in Jamaica, the countries that are closest to Cuba, I think there already is a bit of a softening and maybe a bit of loss of market share to Cuba. How that will be sustained, if it can be sustained, is of course left to be seen. There are lots of people who believe it can't be sustained. But I believe that the interest in Cuba is not going to die right now. It's not going to die anytime soon. I'm quite optimistic that, I mean, having been there twice this year, I love Cuba so much. I wish I could go again. But I believe that Cuba is going to continue to retain that appeal for quite some time. It is not the same in terms of its tourism product as, let's say, a Jamaica, Bahamas, Cayman Islands, and even the Eastern Caribbean. And that's actually part of the appeal that is so unique. And I think the rest of us in the Caribbean that are tourism dependent, we have to think about our own price competitiveness. We have to think about our product and value for money, not just the absolute dollar amount that you spend. Because actually a holiday in Cuba is not cheap, but the value for money. And that's something I think we have to really think about in the Caribbean and how we fix that in those countries where we're seeing tourism activity soften.
Okay, we've got another question here. With the recent gas deal signed in Venezuela with Trinidad and Tobago, do you see that affecting the credit sovereign rating over the next couple of years? Improving.
In Trinidad? Well, our Prime Minister said yesterday he would be happy if we saw this gas in 30 months come to Trinidad. So that means we're probably not going to see the monetary impact of this in terms of export revenue, in terms of fiscal revenue for a 2 to 3 year period. Okay. If at that point in time we do see meaningful improvement in fiscal revenues as a result of this deal, as well as other developments, and we see the fiscal situation improving in Trinidad, all else being the same, why not? I wouldn't doubt that there would be impetus for improvement in the credit rating, but I won't say that alone is something that will automatically right now give the rating agencies pause to improve the rating.
Okay, Alicia is asking a question here. What implications, if any, do you see for the Caribbean for any proposed punitive measures imposed on US companies seeking to offshore operations outside of the United States?
Yeah, that's a big thing in the US, right? From an offshore, if you look at from a manufacturing standpoint, I don't know that we're going to have much of that kind of activity, much of that kind of shift. But if you're thinking about offshore financing, that industry, I think that industry is coming under significant pressure, has been coming under significant pressure for years. And given OECD blacklisting, graylisting, and so on. And the whole, Panama Papers did nothing to help that. I think the whole attitude towards that sector on a global scale and the sentiment is really not that positive. Even Oxfam in their inequality report, where they spoke about the 1% having more wealth than the rest of the world put together, the 99%. Oxfam's policy recommendation was that we need to in terms of the tax havens, as they call them, and offshore jurisdictions, they are pushing for more open and transparent registry of companies and beneficial owners and so on. I think that type of sentiment and that type of policy response is going to increase. So from the US, the US in Delaware, for example, they also have their own sort of tax haven offshore type legal framework. So they have their own as well. But I do see that industry is going to continue to be pressured.
Okay, Nate is asking a question here. Any thoughts on the outlook for the fiscal crisis in Suriname for 2017?
Well, Suriname just raised $500 million via their first big external bond. That should help to ease pressures a little bit. We know that they have embarked on a fiscal tightening program in conjunction with the IMF and their homegrown program. They have financing and funding coming in from the Caribbean Development Bank, the Inter-American Development Bank. So yes, I think that Suriname will do what it takes on the fiscal side and rein in some of their spending and help to bring their deficit down. But they also will have some money coming in from the development partners and from the IMF to give them some support in that regard.
Okay, Carla here asking the question, which opportunities do you see for enhanced trade and economic relations between the EU and Trinidad and Tobago?
Between the EU and Trinidad and Tobago, you think about, if you think about what the implications are from if Brexit goes through and the economic partnership agreement, we already are governed by the economic partnership agreement with the EU. And I'm not so sure if with Brexit, that means that there will have to be a separate agreement negotiated there. But with respect to the EPM, I don't know that we will expect to see anything new in terms of relations with the EU. I don't know that we have the need for that. That's just my sense.
Okay. Questions have sort of like slowed down a little bit there. Come on, guys, ask your questions. You have the opportunity to talk to Mala Dukran here, Group Economist at RBC. It's absolutely brilliant. Mel? Tell them where you can find the webinar again, please.
The link to download the presentation from today is bit.ly/2017 CEOX. That's all in lowercase, so that's bit.ly/2017 CEOX.
Okay, we're going to look along here as we go along.
Could you comment on Belize? That's something we spoke about earlier today.
Restructuring. Yeah, so we're going to see, I think it's February next year, they have a deadline for investors to respond. And where it's being priced now, it looks as though there is an expectation that there'll be a haircut on that restructure. So, I mean, given what we've seen happening in Belize with their external debt and their restructures over the past few years, the thing is, we need to be convinced that this restructure is going to be deep enough so that there will be fiscal sustainability and debt sustainability. And I think that's a big question maybe on investors' mind going into this restructure and with the short space of time that we have to get it sorted out. But I'm hopeful that they will. And the other thing is they've not done this under an IMF program. I think that's a challenge. I think maybe they need to try something different. And having an IMF program not only brings resources in terms of the financial resources, but it also brings the technical assistance and the overall oversight of the adjustment process that I think is important if you're having a restructure.
Okay, we have a nice little question here from Winston. What's your view on the growth or development of microfinance in the Caribbean? Second, can you talk about corresponding banking de-risking impact on the Caribbean?
Okay, so microfinance, I don't know that we have this space in the Caribbean in many countries. We are overbanked in many countries in the Caribbean. We do have a proliferation of credit unions, but in many countries, the size of banking sector assets exceeds GDP. That suggests to me that we have room for consolidation in some countries. So I'm not too sure about that industry being one where you would see a lot of growth. Small and medium business credit, yes, but micro, I'm not so sure. With respect to the impact of correspondent banking relationships being curtailed in the region, this is, I think it's heartwarming to see that this issue has actually brought Caribbean policymakers together to address it, and that we're seeing it getting attention at very high level at the IMF and the World Bank, for example, simply because this is a challenge that is very real and can have serious implications for cross-border investment, trade, and flows of even remittances. And the Caribbean is a very open economy. We need to have these kinds of relationships working very well. And so they need to find a collective solution that involves the regulators, because that's where some of this type of push is coming from, the regulators in the developed world, that is, but also the foreign banks, and in some cases them not interpreting the regulations correctly and imposing regulations, and imposing restrictions that are not required under the regulations. And so there is also some misinformation and confusion. So there is a lot of work to be done to have that issue resolved, but there's some very good papers done by the IDB and the IMF that outline very clearly what the implications are for the region, and it's largely not positive at all.
Let's answer this question from Jason here. Many of those questions actually coming in. What is the current situation in Trinidad for the availability of climate change financing? And what role do you see for multilateral funds, such as the Green Climate Fund in the region?
I don't know that we have anything in Trinidad like that. But I know that there is a push to have debt for renewables swap in the works, and I think it's the UN ECLAC that's pushing that type of dialogue. It's something that is beginning in the region, but I don't know that it's right now something that's underway fully. Guyana has an arrangement with Norway where, for maintaining a certain level of deforestation or below that, they get revenue from the Norwegians. But in general, in the Caribbean, I don't see that that's a big factor. My own sense is that if you look at climate change and who's driving climate change, the biggest polluters in the world, the US, for example, to what extent do these countries that are the biggest polluters, to what extent are they taking responsibility for the climate change that they're causing? I actually think that there should be, on a global scale, some kind of a fund that polluters, on a per capita basis or a carbon basis, however you want to measure it, should place money into this fund, so that when there is a climate change related disaster, like a massive hurricane, for example, that wipes out 25% of Haiti's GDP, for example, this fund should be available to these countries that they can use for reconstruction. Because it's estimated in the Caribbean that 1.5% to 2% of GDP every year is lost to natural disasters. And so I think it's very important that we have these kinds of discussions and make the biggest polluters contribute somehow to reconstruction efforts in the region.
Okay, we've got a question from the High Commission for Trinidad and Tobago to Canada. What are your views on the future of the Canada-CARICOM trade post-2023?
Difficult subject. I am frustrated, to be quite honest, with the pace at which negotiations take place and how these trade agreements have not been properly handled. So I would say that my outlook is not very positive in that regard.
Okay, we'll reserve that answer for later on, I suppose. Okay, so Nate's asking a question again. If this hasn't been covered yet, does China's presence in the region change at all with President-elect Trump and his policies, future policies?
Yeah, what I mentioned earlier, I think the change and the shift that we might see coming from China's stance in this region will come from within China, and maybe not necessarily so much with Trump, because they're trying to hold on to their reserves and trying to be a lot more careful about the type of investments and the return they're getting on the investments that they put out and in the rest of the world. So I suspect we're going to see a softening there simply because of their reserve situation, not necessarily because of President-elect Trump in the US.
Indeed. Run through here. Okay, seems like.
Well, maybe we can, because I think
we're close to time.
Yeah, we're close to time.
Okay.
One final comment. I've already given the link several times. I'll just go ahead and say it one more time that the presentation from today is available at bit.ly/2017 CEOX, all in lowercase letters. I also wanted to mention that those of you who are not following Marla Dugran on Twitter or following her on Periscope can follow her. Her handle is @Marla Dugran, and I'd like to thank you all for joining us today. We really appreciate your participation. We appreciate the participation of Marla and Roger here today.
Happy to have you. This has been fun.
Thank you so much.
Thank you, everybody, for tuning in.
And enjoy the rest of your day.
Okay.